Hello, and welcome to another explainer video from Trinaya Real Estate. Today we're going to break down the key differences between a loan officer and a mortgage broker. If you're planning to buy a home, understanding the roles these professionals play can help you navigate the process with confidence. Many people confuse the two, but they have distinct responsibilities, and choosing the right one for your situation can make a big difference in your home buying experience. By the end of this video, you'll have a clear understanding of what a loan officer does, what a mortgage broker does, and how to decide which one is right for you. Let's dive in. Let's start by talking about loan officers. A loan officer is a professional who works for a specific financial institution, such as a bank's credit union or mortgage company. Their primary job is to help borrowers navigate the process of applying for a loan. Loan officers assess your financial situation by reviewing your credit history, income, and other relevant details. Based on this information, they recommend loan products offered by their employer that might be a good fit for you. Since loan officers are employees of a specific institution, they are limited to offering only the loan products available through that institution. This means they don't shop around or compare options from other lenders. Loan officers are required to be licensed, which involves passing exams and registering with the Nationwide Multi-State Licensing System, or NMLS, to ensure they meet industry standards. In summary, loan officers are your direct point of contact when you work with a single lender, helping you through the process of securing a loan from that institution. Now, let's talk about mortgage brokers. A mortgage broker is an independent professional or part of a brokerage firm who helps borrowers find the best loan options available from multiple lenders. Unlike loan officers who work for a single institution, mortgage brokers act as intermediaries between borrowers and a variety of lenders. Their role is to assess your financial situation, similar to a loan officer, but instead of being limited to one lender's products, they compare loan options from multiple institutions to find the one that best suits your needs. They also negotiate terms and rates with lenders on your behalf. Mortgage brokers are required to be licensed, just like loan officers. They must meet state and federal licensing requirements through the Nationwide Multi-State Licensing System, or NMLS, and may also need to comply with additional state-specific regulations. Because mortgage brokers have access to a wider range of loan products, they can offer more flexibility and tailored solutions, especially for borrowers with unique financial situations. However, their services may involve additional fees, which are either paid directly by the borrower or covered by the lender. In short, a mortgage broker provides borrowers with access to multiple lending options, acting as a matchmaker to help secure the best loan terms possible. Now that we understand what loan officers and mortgage brokers do, let's compare them side by side to highlight their key differences. First, let's look at employment structure. Loan officers work for a specific financial institution, such as a bank or mortgage company. They represent that institution and can only offer loan products from their employer. In contrast, mortgage brokers are independent professionals or work for brokerage firms. They have access to loan options from multiple lenders. Next, we have product variety. Loan officers are limited to the loan programs provided by their institution, which can restrict your choices. On the other hand, mortgage brokers can shop around among various lenders, giving borrowers more flexibility and a broader selection of loan products. When it comes to fees and compensation, loan officers are typically salaried or earn commissions through their employer. Mortgage brokers, however, may charge a broker fee directly to the borrower or receive compensation from the lender for arranging the loan. It's important to understand these costs when deciding who to work with. Another key difference is the level of advocacy. Loan officers represent the financial institution and prioritize their employer's interests. Mortgage brokers, however, act as intermediaries and advocate for the borrower to find the best possible loan terms. These differences make it clear that loan officers and mortgage brokers serve distinct purposes in the home loan process. Knowing these distinctions can help you determine which professional is best suited to your needs. Have you ever worked with a loan officer or a mortgage broker? What was your experience like, and did you feel like you made the right choice? Our broker would love to know your thoughts, and he reads and responds to comments, so feel free to share your story below. Let's dive into the pros and cons of working with a loan officer. First, the pros. One major advantage is the direct access you get to the lender. Since loan officers work for a specific financial institution, they are well versed in their employer's loan products and processes. This expertise can make the loan process more straightforward, especially if you're already a customer of the institution. For example, if you have existing accounts with a bank, the loan officer can often streamline the process by leveraging your banking history. Another benefit is simplicity. Loan officers can often provide quick answers about your application status and requirements since they work within the same system that will approve your loan. Now, the cons. The biggest downside is the lack of variety. Loan officers are limited to offering the products available through their institution. This means you might miss out on more competitive loan terms or options that could be better suited to your needs. Additionally, loan officers work for the lender, not the borrower. While they can guide you through the process, their ultimate goal is to sell their employer's products, which may not always align with your best interests. Understanding these pros and cons can help you decide if a loan officer is the right choice for your situation. Now, let's look at the pros and cons of working with a mortgage broker. Starting with the pros. The biggest advantage of using a mortgage broker is access to a wide range of loan options. Since brokers work with multiple lenders, they can shop around to find the best interest rates and terms that fit your unique financial situation. This can be especially helpful if you have a less than perfect credit score or need a specialized loan product. Another benefit is personalized service. Mortgage brokers act as your advocate, negotiating with lenders on your behalf and simplifying the process by handling much of the paperwork and communication. Brokers are also valuable if you're unfamiliar with the loan process or overwhelmed by the sheer number of options. Their expertise can save you time and help you make informed decisions. Now, the cons. One potential drawback is cost. Mortgage brokers may charge a broker fee, which could either be paid by you or included in the loan terms through the lender. While this fee is often worth it for the added flexibility and better rates, it's something to consider when comparing options. Additionally, brokers work to find you the best deal. They rely on third-party lenders for final loan approval. This can occasionally result in longer processing times compared to working directly with a loan officer. By weighing these pros and cons, you can decide if a mortgage broker is the right choice for your home loan journey. When deciding between a loan officer and a mortgage broker, there are several factors to consider. Let's break them down. First, your financial situation. If your financial profile is straightforward and you have a strong credit history, a loan officer may be able to meet your needs with the products offered by their institution. However, if your financial situation is more complex or requires specialized loan options, a mortgage broker might be a better fit due to their access to multiple lenders. Next, think about your loan product needs. Are you looking for a conventional loan, or do you need a specific type of financing, like a VA loan or FHA loan? Loan officers can provide these products if their institution offers them, but a mortgage broker can help you compare options from different lenders to ensure you get the best terms. Interest rates are another critical factor. If finding the lowest rate is your top priority, a mortgage broker's ability to shop around may give you an advantage. On the other hand, if you're comfortable working within the rates provided by a single institution, a loan officer could work just fine. Also, consider the level of service you want. Loan officers tend to follow the processes and policies of their institution, which can sometimes feel more formal and structured. Mortgage brokers, however, often provide more personalized service, tailoring their approach to your needs. Finally, don't overlook fees and costs. Loan officers usually don't charge upfront fees, while mortgage brokers may charge a broker fee or rely on lender-paid compensation. Be sure to ask about all costs upfront to avoid surprises. By evaluating these factors, you can make an informed decision about which professional is better suited to help you achieve your home buying goals. Now, let's address some common misconceptions about loan officers and mortgage brokers. These misunderstandings can lead to confusion, so it's important to set the record straight. Misconception 1. Mortgage brokers are always more expensive. This isn't necessarily true. While mortgage brokers may charge a fee, they often have access to better loan terms and lower interest rates because they can compare options across multiple lenders. In some cases, this can save you money in the long run, even with the broker's fee. Misconception 2. Loan officers don't negotiate rates. While loan officers are limited to the products offered by their institution, they can sometimes negotiate within those parameters to provide better rates or terms. It's always worth asking about available discounts or promotions. Misconception 3: mortgage brokers have access to all lenders. While brokers work with a wide variety of lenders, they don't have access to every single one. Some lenders work exclusively through their own loan officers and don't partner with brokers. This means you might miss out on certain loan products by going through a broker. Misconception 4: loan officers and mortgage brokers offer the same level of service. The truth is, their roles are different. Loan officers focus on their institution's offerings, while mortgage brokers take a broader approach, offering a wider selection of products. The level of service you receive will depend on your needs and which professional you choose. Clearing up these misconceptions can help you make a more informed decision about who to work with in your home buying journey. If you have any additional questions or myths you'd like clarified, feel free to leave a comment below. Let's talk about specific situations where you might prefer a loan officer over a mortgage broker, or vice versa. When to choose a loan officer might be the better choice if you already have an established relationship with a bank or credit union. For example, if you have a checking or savings account with a lender, they might offer discounts or streamlined processes for existing customers. Loan officers are also a good option if you're looking for simplicity. Since they work directly for the institution providing the loan, there's no middleman involved, which can make the process quicker and more direct. This is especially helpful if you're confident that the lender's loan products meet your needs. When to choose a mortgage broker, on the other hand, a mortgage broker is a great choice if you want access to a variety of loan options. If you have unique financial needs, such as self-employment income, lower credit scores, or needing a specialized loan product, a broker can search multiple lenders to find the right fit for your situation. You may also prefer a mortgage broker if competitive interest rates are your top priority. Brokers can compare offers from different lenders and negotiate terms, potentially saving you money over the life of your loan. Ultimately, the decision comes down to your specific needs and priorities, whether you choose a loan officer or a mortgage broker. Understanding your options will help you feel more confident in the process. If you're still unsure, let us know your situation in the comments, and we'd be happy to help point you in the right direction. Now that you understand the differences between loan officers and mortgage brokers, let's talk about how to find the right one for your needs. Finding a loan officer if you're interested in working with a loan officer. Start by contacting your bank, credit union, or a mortgage company you trust. Many financial institutions have dedicated loan officers who can guide you through their loan offerings. If you already have a relationship with a particular bank, this could simplify the process and even give you access to special discounts. You can also search for loan officers online through your preferred lender's website, where they often list contact information for their representatives. Finding a mortgage broker if you'd prefer to work with a mortgage broker. Consider asking for recommendations from trusted sources such as friends, family, or your real estate agent. Brokers often come highly recommended by others who've had good experiences with them. Another option is to use online directories or databases specifically designed for finding mortgage brokers in your area. Websites like the Nationwide Multi-State Licensing System, or NMLS Consumer Access, allow you to verify a broker's credentials and licensing status. Verify licensing and experience whether you choose a loan officer or a broker. Always verify their licensing through the NMLS to ensure they're qualified to help you. Additionally, look for reviews or testimonials from past clients to gauge their level of service and expertise. By taking the time to research and choose the right professional, you'll be better equipped to navigate the loan process and find a solution that works best for you. If you've already worked with someone and have tips for finding a great loan officer or broker, let us know in the comments. Now that we've covered the differences between loan officers and mortgage brokers, let's do a quick recap. Loan officers work for specific financial institutions and offer loan products from their employer. They provide direct access to their lender but have limited options. Mortgage brokers, on the other hand, act as intermediaries, shopping around multiple lenders to find the best loan terms for your unique situation. But their services may come with additional fees. Choosing between the two depends on your needs. Do you value simplicity and a direct connection with a single lender? Or do you want access to a variety of options and someone to advocate for your best interests? We hope this video helped clarify the roles of these two professionals and empowered you to make an informed decision. If you have questions, need clarification, or want to share your own experience, leave a comment below. Our broker reads and responds to your feedback and would love to hear your thoughts. Thanks for watching. Don't forget to like this video, subscribe to our channel, and hit the notification bell so you never miss out on our latest real estate tips and insights. Oh, and one more thing. We just relaunched our podcast. If you're interested in getting weekly insights on what's going on in the Connecticut real estate market, be sure to tune in to the Trinaya podcast every Monday. It's available on all major podcasting outlets. But that's all for now. As always, thank you for your time and make it a great day.